Now, in just a couple days, the Federal Reserve is going to meet to make another decision about interest rates. Whatever they decide, there may be another long-term effect, which we could be feeling for years to come. This is Robinhood founder Tudor Jones on CNBC.
Our interest bill is going to very shortly exceed our defense spending in just a couple of years. Probably be close to 20% of your taxes will go to pay interest on the debt unless we do something.
So what do you see as the positives and negative effects of these higher interest rates, Nolan?
Well, it definitely is kind of pros and cons of where rates are today. And in fact, I haven't really seen rates be this high prior to where my kids have been born. And, my oldest, as many listeners know, is about to finish graduating from college. So it's been a long time that we've seen this. There can be some negatives that are out there. As they talked about in this particular article, the government has put us in a really bad situation. And that bad situation is the out-of-control spending that we have with the national debt. This higher rates ultimately can lead to, as they talked about on that article, a massive amount of spending our government's going to have to do. Think about as an individual, if you just maxed out your credit card and then interest rates went up, your credit card bill is going to go up all the time, and you've got to figure out how to pay off that credit card bill. So the government, the solution to pay off their credit card bill is going to be probably higher taxes. We know the tax rates are already set to expire in a couple of years, so for most people, higher taxes are coming. So this is a train that is coming down the tracks. And the best thing to do is try to figure out how do you get off that train track, because it's going to slam you with higher taxes, and that could be a major negative. So what you need to do here is work towards shifting money to tax-free accounts, or what could be potentially tax-free accounts. And so what I mean by that is, those of you that are still working, look to see if your 401k has something called a Roth 401k option. So with a Roth 401k option or with a Roth IRA, you're paying taxes today. So the money that you earn through your paycheck, you're paying taxes on it. You're making those contributions to the Roth 401k or the Roth IRA. And then that money, it can grow. And as long as you follow the rules of, how to take withdrawals out, meaning that it needs to be open for 5 years or longer, over the age 59 and a half, and you follow those rules and take the money out, that not only the money that you put into it, but the growth of that money and all the profits over the years could be tax-free. So a huge advantage, I'd say, for younger folks that are out there. So if you don't have a Roth 401k option and it's available to you, that's where, again, I would think that if you're putting over and above what the company matches, you may want to consider redirecting those contributions into something that's tax-free. That could be the Roth IRA. And in some cases, for younger families, maybe if you're married, newly married, maybe you have a family that you're starting out, sometimes a cash value life insurance can also be another good solution as well for a younger family, because not only are you building that retirement nest egg, you're also looking to protect your family in the event that something happens while you're young. So things like the mortgages can get paid off and income can happen in the event that somebody gets hurt, sick, or dies. And what you can do, though, is the third option is for those of you that are close to or in retirement time and you're already savers, is look at doing Roth conversions. So with a Roth conversion, you have a deadline of December 31st. That deadline is right around the corner. And a lot of these financial institutions, they start moving to best of process, and that will only be in a couple of weeks away. So if you want to look at maybe should you pay some money now before the end of the year, you need to give our office a call. You need to talk to your CPA and an accountant, and you need to complete a tax roadmap and the checklist and look at both strategic and or tactical Roth conversions before year end. Again, call our office. We'll be happy to do that. The other negative is the cost of loans is much higher today than where it was. Again, I just went on Google, and when I Google current 30-year mortgage rates, the quick response rate shows that, the rates are now in that 8% range. Again, it depends upon your credit score, how much you put down. But, when you think about mortgage rates at 8%, I had to think about the fact that One is I'm on my third home. I paid off my house in September of last year. And I remember when my wife and we bought our first house over on Hoyles Avenue here in Toledo, and we kind of high-fived each other as we left the closing because we had a mortgage rate of 6.75. And I had heard these stories of people who had, 10, 11, 12% interest rates. And obviously at 6.75, I thought that was a big win. Now, we saw interest rates where they went down. I mean, at one point you could get a mortgage in the 2.5% range. Now, the younger folks, the mortgage rates are significantly higher. And then you have the compound effect that, the price of a house with supply and demand is significantly higher. I would be cautious if I was a younger person going in to overextend myself too much right now with where interest rates are and where housing prices are. I would be very smart in the fact that, you don't want to get too much of a loan at a young age and too much of an obligation. So if something bad happens, like you lose your job, you're in a situation where you're obligated to these things. I think a lot of people have a desire to have a nice house and, have the fancy things. And, it's what I think we've always referred to as keep up with the Joneses. But folks, if you're young, don't worry about keeping up with the Joneses. Just keep yourself financially sound. The negative in the stock market is we look at the fact that, higher interest rates, it could slow down growth of stock companies. It could create a recession. It could create increased volatility in the stock market. We've seen that volatility happen in the last several months since July. And I also continue to see risk in the bond fund market. But what are negatives also create positives. So first of all, the positives, for those of you that are savers, if your safe money is not getting more than 5%, we really need to talk because this is an incredible opportunity to replace some interest-sensitive investments and or refinance some of your accounts and lock in high fixed rates. The other positive is with the pullback that we've had in the market here recently, and there could be more further pullback, this can create a great buying opportunity. You want to have a predetermined entry point, and there's strategies that allow you to hedge your bet that can give you downside protection, yet still allow you to participate when the market goes up. If we look at election year results in the market, there could be a lot of things that say getting positioned to take advantage of a pullback in a market could be a great opportunity for you. So there's ways, again, there's pros and cons of higher fixed interest rates, and it's a matter of how do you apply it to your situation.
Whether or not the Fed chooses to increase rates in the coming days, it looks like it is going to be staying coming into 2024, coming into an election year. Lots of threats, but also lots of opportunities as it pertains to your finances to see how to make the interest rates work in your favor, whatever may come down the line. America's Retirement Headquarters, they can help with that. You just have to take the first step and give a call. 419-794-3030 is the phone number. Once again, 419-794-3030. You can also find them online at arhq.com.